Welcome to Business Talk. As always, your host Michael Avery here to talk to you about a very interesting business, a business that has a rich history in South Africa and I think was founded back in 1969. But in today's environment, I think a business that really has a compelling value proposition for South Africans who are looking for smarter ways to get the things that they need for their homes without some of the heavy upfront costs or long-term debt commitments. Into Teljoy, as I said, a company with a very rich history that offers a very flexible rent-to-own model. And joining us today is Jonathan Hurvitz, the CEO of Teljoy, to explain how the model works, how it's evolved over the years, and why it's a smart choice. Jonathan, great to have you on the show.
Michael, thanks for having me. Good to be with you.
Now, I think many South Africans will know that, Teljoy is as South African as Chevrolet and Sunshine and the Springboks. Can you maybe just give us a bit of a rundown of your history for those who actually don't know the founder's story and that kind of thing?
Sure, absolutely. Yeah, listen, I always love telling the story. In fact, I've got the original advert hanging up in my office from 1969. So our founder, Theo Rutstein, was listening to the moon landing on the radio. He thought, well, if Zimbabwe at that stage, Rhodesia, has TV, there's no ways that we could stop TV coming to South Africa. He put an advert, full-page advert in the paper with a little cutout at the bottom that said, if you are interested in TV, fill this out and send it to me. Within a couple of weeks, thousands upon thousands of interested parties. And he took that to the bank, raised some money. And then we installed our first TV in December 1974. Interesting that from 1969 and 74, there was a lot of turmoil in South Africa, particularly the apartheid government wouldn't allow any media that they couldn't control into South Africa. So, we spent a lot of time trying to convince South African government that TV would be beneficial. And we landed up getting it right. So we brought TV to the country. The business grew from then. We were looking for alternatives. We then brought cellular in, and even before that, MultiChoice launched their business into our distribution network, which we had. We had many customers. We then brought cellular into the country. Many people don't know that as part of our history, Teljoy Cellular was the first telco, just before Vodacom. We then were bought by Vodacom. We then bought the rental business back, and we got we developed the rent-to-own model, and we've been growing ever since. So it's been a very exciting business from the perspective that we've been at the forefront of customers' requirements for 55 years. So it's a very exciting place to be. We've expanded our product set. And to your point, it is a model that is still very relevant to South Africans. Whilst the access to cash and credit have largely increased since the 70s, I think that there is still a very particular relevance to our model if you understand it the way that we do.
So on that point, and I think for those who might be unfamiliar, and it's so interesting because I think there might still be a few out there who think Teljoy TVs, but if you go onto the website, it's everything from gas price to telcos, as you say. I mean, literally everything. How would you explain Teljoy's rent-to-own model? What are the key differences between your model and what we see as kind of traditional credit or hire purchase agreements that consumers might already be familiar with?
The biggest difference is the flexibility. So what we do is we offer, it's a month-to-month rental. And over a period of time, you can exercise your options to own it at the end of a predetermined period, but you're never more than 1 month away from changing your situation. So you can upgrade, downgrade, or cancel. Traditional credit, you locked in. If you want to get out of it, you have to go get a settlement value. You have to then sell it. You might be underwater, so you have to supplement. But really, our flexible model is something that differentiates us. Because it's a rental, and I know that for some South Africans, rental is reserved for people who can't afford necessarily to buy for cash, which is not the case. We all brought up with an idea that renting is bad and we must own everything. But that holds true for maybe asset bases that have capital appreciation. For commoditized items such as what we sell, we're selling a service. So our service is a full maintenance lease. So as an example, if it is a TV, we'll cover TV losses. So you won't have to pay a TV loss. We will look after the risk for you. So you don't have to have that on your household insurance. We'll take care of it. Delivery, installation, obviously we take care of it. And it's an extended warranty on steroids, because we will cover everything, not just for repairs, but for replacements as well. So again, the flexibility of our model, you're only ever 1 month from changing your situation, and the competitiveness of the pricing in the market is not dissimilar to credit. People always assume that rental, you're going to be spending much, much more. Our model is mechanism for ownership with the virtually exact same cost of capital that you will have through credit, and with none of the fine print in terms of we're going to publish a specific price relative to the basic, your interest rate, but we might price you for risk. We don't do that. We don't price to risk as in ordinary credit would.
And that's a huge distinction, and especially at a time where I think many people are heavily reliant on credit, often without fully understanding the long-term costs. This is really a much smarter alternative to credit. Do you think South Africans truly grasp the financial risks that are tied to traditional credit commitments?
No, I don't think they do. I think that sometimes people find comfort in complexity, and credit has always proven to be quite complex. I think that the NCR has done an amazing job at making sure people understand credit better. But when you're going through that transaction, it becomes quite complex, particularly if you look at credit cost multiples and life cover, and we'll put all of these value added services where at that stage people are so far down the road, you've already made peace with the fact that you're getting this the item or the good or the appliance or whatever it is, and what the initial price was versus what it lands up being are very different, particularly when you are locked into something. And anybody who would have bought something 5-6 years ago on credit with however many interest rate hikes, that gets passed on. Ours is one price. We don't price to the interest rate, so it stays pretty static.
Yeah, and again, why I think it's a smarter option in an environment where we've seen a lot of volatility. I know everyone expects, when the Fed cuts rates and the SARB's going to cut rates and things are going to turn around quite quickly, but you just, nothing's a given. There are all kinds of unknown unknowns out there. China could go and try and invade Taiwan. US election, all of a sudden heightened risk, and central banks tighten up. And so to make long-term credit commitments in an environment like that, I think you've got to be very confident in your circumstances and your ability to read that crystal ball, or you'll end up eating a bit of broken glass, as I think Ray Dalio said. Given the current economic strain that I think many households are under, it was evident in the second quarter GDP figures. How do you ensure that your subscription fees remain competitive while you're still offering this, while you're still providing top brands and you're offering the service of covering the maintenance and the warranty and the installation? How do you manage to achieve all of that?
So we're lucky in the sense that the price of these appliances and electronics actually get cheaper over a period of time. I mean, if I told you 10 years ago when I started at Teljoy, our biggest movers was a 40-inch TV and a 32-inch TV. Now we sell very few of those. Now we're moving 75-inch TVs for a similar price of what it was. So a lot of the commoditized items become cheaper as we go. We only stock top tier brands. So from a maintenance perspective, we've got a lot of comfort that these things aren't going to break, and you're going to get the best value out of it. It wouldn't make sense for us to put in, because from a reputation perspective, we don't want to be the guys who are supplying, low level tiers. We will make sure that we are putting the best product in, and we will take the risk on that. I think that we've got, because of the scale of our network and our reputation, we've got our suppliers we're extremely close with. We are a particular channel for OEMs to plug into the market without any scary upfront costs. Many people won't know a couple of the brands that we helped launch in South Africa because we were the guys who they could get into without breaking the market from a pricing perspective, where people could, in a sense, try before you buy. But once people get into Teljoy, they realize that it's the smarter way to operate. And we've got customers with us who've been with us since 1975. And we average customer has 2.5 appliances with us, and we can track all of the data through their life cycle. People come for a TV, they then go to a fridge. We've got everything from lawnmowers, as you said, to gaming. And we can see when people start to have kids, they start decking out their playrooms with Xboxes, PlayStations, and other TVs. And our biggest mover, funny enough, is one of our biggest movers are beds. Every South African changes their bed every 18 months. So
I can understand. I've got daughters aged 10 and 7, and they grow like spring onions, but their taste and what they like in beds, from double bunks to now single or doubles, seems to change with every passing year. So it makes a lot of sense to have that kind of flexibility.
Yeah, absolutely. And I think our practice what I preach. I've got 3 daughters, so I know that the thing that saves me at the moment is we brought in these Dyson hair wraps, they called. So I wouldn't know. I mean, I don't. You can see I've spent very little time on my hair in the morning, but my girls and my wife use this hair wrap, and it's saving me a lot of money in salon costs for my little girls and my wife as well.
Yeah, well, it just shows you. But interesting that you mentioned the model actually fosters more trust and more loyalty compared to other retail financing models. That must help you build partnerships with those OEMs, and obviously then all feeds down to being able to offer the most competitive prices.
Absolutely. We are extremely proud of our relationships with the OEMs, and across the board. We really try and make sure we create value for all of our stakeholders, whether it is OEMs, whether it is our customers, because we've got the ability to do so. We've got we've got a massive vested interest in making sure customers are happy with the devices that they've got. Given the fact that we have such a rich history, we've also got mounds and mounds of data, which we share back with the OEMs into their feedback loop, whether it is, the quality of a particular model, as an example, and the servicing costs of a particular model. We keep them honest because they have to provide a good quality product, and they don't always love us because there's few people in South Africa who exercise on their warranties like we as the owners of those appliances do, because people often lose their slips, and it becomes a bit of a drawn out process. So when there's a problem, we like to say that we're your best call on your worst day. So the customer's got absolute peace of mind in respect of making sure that there's a TV in your house. I mean, our founder Theo Ratstein often used to say that if you had an issue, we will make sure that you could watch the news that night with a replacement TV. In those days, I think it was maybe a slightly simpler, but we give loan units when there's an issue. So make sure you're never without an appliance, particularly when it comes to, houses can't operate without a washing machine that's working all the time, particularly in big families.
Yeah, and I think insurance is a big one. With the advent of load shedding, many insurers now, unless you've specifically opted in for surge protection and you can demonstrate you've got all of this, that they won't insure certain, breakdowns for surge, damage on a TV, for example, or something like that. So I think the insurance, and it also, if you do opt in, it adds a lot of cost to your household insurance now. So that's another very interesting selling feature. I suppose you benefit from the economies of scale to be able to take the insurance on yourself.
Sure, absolutely. But I will just say, and this is a big shout out to all the OEMs, is that I don't think that we have seen very little, if any, change in our sort of loss ratios around risk as a result of load shedding. So I think that sometimes, in the insurance space, some people maybe use insurance as a forced saving and a little bit opportunistic. So I think that the scale of the insurers, obviously they had to opt out of that potential risk because I think the exposure was just too high. We haven't seen a big change in loss ratio as a consequence of load shedding. But again, it is, people don't factor that into their costings. If you think about some of the added benefits just in our model, even from a TV perspective, TV license over 3 years will cost you $265 a year. Okay, so that cost is now gone. Insurance on a TV, anywhere probably between 100, 150 Rand a year over 3 years. That cost is gone. You'll never pay delivery and installation in our environment. And you add on to that flexibility, and this is across all of our product sets. I'm using TV as an example, but across all of our products where, you can get a replacement if it's not fixed. If you don't opt to take ownership at the end of our period, you can drop into what we call a renter and extension, and the average time that those appliances will be on that was at least another 6 or 7 years. So again, a big shout out to the OEMs. The quality of the products are excellent to the extent that for anywhere between 8 and 12 years, these appliances will continue to work as good as new, particularly when you've got a partner like us who are making sure that it's maintained properly.
I needed to come get my vacuum cleaner from you. Ours packed up, and I won't mention the supplier's name. It was a high-end Dyson wireless vacuum cleaner that we spent a fortune on. But safe to say we won't be going back to that particular retailer anyway. We also see e-commerce has changed the way we shop, our behavior, online subscriptions, that kind of thing. And, I was on your website earlier today. You've really spent a lot of time in thinking about digital and the online user experience. So maybe just take me a little bit through that.
Yeah. I think that's the benefit that we've got being we aren't part of the Credit Act, so we can do things a lot differently. So remember, it's worth making the point that we're not a credit agreement. So it's a rental. It's a month-to-month rental. We spent a lot of time realizing our competitive advantage lays within the fact that we as a rental business aren't obligated to follow NCA. So we can do things a lot differently from our sort of our contemporaries in that space. We've created a fully online journey to get you checked in and checked out within a couple of minutes, with the commitment from us that we will be delivering your appliances. Our model is very straightforward. We understand what people are looking for. We try and make sure that with our marketing team, we are playing to what people want and need. With help from our suppliers and support there, we've got the process is very straightforward. You go into our website, you will get an open to buy, for lack of a better word, so you know what you can shop with on a monthly premium perspective, for lack of a better word. And then you go through the process. We ask for your ID number, we ask for a selfie. If everything passes, you go straight through to delivery address, signing contract online, and go straight through to my bookings team in my sales department. Sometimes where there's a failure in that process for various reasons, we may ask for some supporting documentation, but we've tried to streamline that process as best as possible, because we recognize that customer experience is everything, particularly from cradle to grave. The fact that we've got customers still going from 1975, what we've tried to do is to make sure that experience lives on in a digital journey. And along with that digital journey and the support of our suppliers and an extremely good team around me from a marketing perspective, from a foundation perspective, we are super excited that we can really make sure that we can change the way South Africans view using appliances and electronics more as a service as opposed to a capital appreciating asset.
Yeah, and I think many businesses have gone capital light strategically. I think consumers also now are much more open to not having to own things via Airbnb and various other platforms where the kind of rent to own or just rent month to month model it socialize a lot more in a digital environment. Looking ahead, what are the kind of new innovations or expansions that are on the horizon for Teljoy?
So, we're very excited. Considering we are keeping up to date with the necessary tech around the products that we're wanting to offer, we are developing what we call Teljoy Pay, which is effectively we can attach ourselves to the end of a checkout process in any of the other retailers, which means similar to a PayFlex or a Pay Just Now, is that you get to the end of that process, you choose your payment method, Teljoy will step in at that point. We will do a very simple process where we will continue to rent to you, you get your appliance from a retailer. Those types of projects are extremely exciting, but the core of the business is always to make sure that we're offering the best products at the best price and making sure the customer experience across the board is maintained. And I think that's where we spend a lot of our time making sure, because that can always be improved and people remember you for the small touches. So, I think that's where we've got our reputation. Our parents all had Teljoy TVs. I think if they knew now that they could get a Teljoy fridge or a Teljoy bed. And just to note, all of our appliances are brand new. We're not going to send you second-hand beds, which, although people often say, well, I'll never rent a bed. So, well, if you've stayed in a hotel or an Airbnb, you've definitely rented a bed.
Yeah.
Before you judge, just understand. And we all rent on a daily basis. We've all got Spotify and Apple Music and Netflix. None of us have bought CDs or movie content for years and years and years. Yet, what we've got to socialize and normalize is this idea that appliances and electronics are really only a service. So I often like to say, we don't sell TVs, we sell family time. We don't sell fridges, we sell cold drinks. We don't sell washing machines, we sell clean clothes. Because that's what it is. And because you can get for the same price as a couple cups of coffee a month, you've got a washing machine which adds the value to your house.
Yeah, I think it's a great way of summarizing what you do. But to your earlier point, you're in the business of making people happy, and you have been since your founder Theo first saw the gap in 1969. But it's been incredible to see how much you've innovated and adapted and offered these new services and ranges, and that user experience, I must say, on the website. So many, try to do the digital transformation thing and get it wrong. I think you've got it absolutely right. And the buy now, pay later, that kind of fintechy element, that's very exciting. So hopefully we can have you back on the show to talk a little bit more about those plans in detail in the not too distant future. Jonathan, great chatting, and keep up the fantastic work at Teljoy. We've got to be one of South Africa's best loved brands in the market.
Michael, thanks for having me.